HIMS House, episode 31. My name's Jonathan Stern. I'm here as always with Patrick Lester, who goes by the name Bayside in the HIMS House Discord. We are also joined by Amit. Amit is the founder of AK Media and arguably the biggest name on all of FinTwit. He's a longtime bull of Palantir and Robinhood, but does not currently own shares of HIMS. Also joining is Nate Endicott, a consultant at Venture Tech Group. Like Amit, Nate's been a Palantir bull since 2020, but unlike Amit, he does own shares of HIMS. Now, before we dive in, a bunch of people on Twitter have been asking me, why even have Amit on? He doesn't own HIMS. He doesn't follow it that closely. What the hell is going on here? And I have to say, totally fair. But what I want to say is that's exactly why he's here. Amit gets asked questions constantly about HIMS, and yet he's never been sold on the story. So we've decided to make this episode a little bit different than usual. The goal today is to pitch Amit, to make the case for why HIMS and Hers is a compelling company and a great investment. But before I turn it over to Amit, just one question of my own. I want to set the stage. Amit, why hasn't HIMS ever grabbed you the way that Palantir, Robinhood, and various others have?
Simple reason. Very simple reason. Nate has not sent me enough messages about stock in our group chat. And if he did, I'd be sitting on, a juicy average in the 20s, but I'm just kidding. I bought it at 28, and then the Novo partnership came out less than 10 hours later, and I sold it at 40 because I was like, 40% in 10 hours. Like, I didn't really buy it as an investment. I bought it to get Nate to shut the hell up because he kept texting the group chat. I was like, Nate, I got 100 shares. Like, shut up now. I got it. But then it ran up too quick. Obviously bad timing because it was going to go on a squeeze. I think the real reason is Palantir, to me, from a philosophical perspective, was very interesting in terms of what they were doing with Western values. Alex Karp, the CEO, very charismatic, someone who got my attention. Robinhood, I used the product for the past 6 years. I saw the company at an $8 billion market cap with $6 billion in cash back in 2023, and I was like, I think there's something special here. HIMS, I've never seen as really a tech company, which is kind of what I orient myself to, and I've never really understood the overarching thesis on this kind of Netflix of health or Amazon of health that people talk about. And so I'm excited to learn more. I do think it's cheap, even at $60. I think there is a compelling narrative with the short float. I think it could hit 100 before Hood, just given how short it is. But I haven't been sold. I'm actually buying it. So maybe after today's episode.
That's helpful context. I said I wanted to turn it over to you right after that. This is going to be a pitch episode. The hope is maybe by midday tomorrow, you'll own some shares of HIMS. What questions do you have of us, Amit?
So I guess I have a couple questions, but I guess here's my first one. What is the 10-year vision, big picture that I should care about? And I guess you can kind of back up and explain to me what even HIMS is as a reason to get excited for the next 10 years of their growth or their momentum. That would get me more interested in HIMS than in NVIDIA, right? Like there's an opportunity cost to my capital. So why reject the AI revolution for hair pills and ED pills? And like, what's so more exciting with that?
Patrick, do you want to jump in on that?
Oh, well, sure. So there's a longer answer there, but I'll try to keep it short. So the ED pills, that kind of stuff is certainly sort of the shorthand for what HIMS has been. I would say that HIMS started with what was easy. When you're scaling up a business, if you're going to make money with hair loss and sexual dysfunction related products, things of that nature, it's fun. It's easy to make fun of it, and many people do. But if it's bringing in the money, it ends up creating the base for what comes after. So if you started with Amazon and you're only selling, say, the New York Times top 10 sellers, that kind of thing, you got to start somewhere. You're going to start with where you're going to get the best direct-to-consumer response, and that's where they started circa 2017, 2018. And they stuck with that because one of the big barriers, or I'd say one of the other bear cases that's out there, I'll start with that, is that this is a company where it can't really go anywhere. I mean, it's ultimately there's only so much they can do. It's going to eventually top out, never grow any beyond that. But what they've done is they've created this base, and then what they're getting to, and you actually mentioned this earlier, this so-called Netflix of healthcare. They've created a base that has created something of a moat. So people are saying, oh, anybody can start. I go by Bayside in the Discord. I could start Bayside's healthcare tomorrow and throw up a website and maybe get a few people to pay for something. Am I going to make money doing it? No, I'm not. In fact, you can tell because HIMS has already been down this path. You need to have somewhere between 1 and 1.5 million customers to even break through to become profitable. That in itself is a moat. You also have to be a recognized brand. So Bayside's drugs, no one's going to know who that is. For all they know, I'm selling, counterfeit drugs on the internet. So you have to have a trustworthy brand. You have to reach that threshold of profitability. I personally believe you're not going to see more than 3 or 4 companies that will be profitable at scale in the direct to consumer healthcare space. So where does that mean in terms of the future, the 10 years that you mentioned? If you were to go 10 years into the future, you're still looking at probably 3 or 4 companies that are profitable, that are at scale, with HIMS being at the top of the chart. With that comes all of the economies of scale that go with that would go with like an Amazon, something like that, which I actually like that comparison a little bit better. And what you're going to end up having is, and we're already starting to see it, is this expansion beyond uh, these core categories they have right now. They're going to have all of these pharma companies, medical device makers, and others who are going to be coming to them because that's where the customer is on a cash basis. And so when you've got only 3 or 4 companies that are doing direct to consumer in a kind of profitable way at scale, and a lot more than that in terms of pharma companies, in terms of medical providers of various kinds, including device makers, that gives HIMS and the big players leverage in the same way that Amazon has all sorts of third-party folks that are operating in its environment, and they all go to Amazon because that's where the customer is. The same thing I see happening in the healthcare space. So you start modestly, you grow to scale fast with a few core categories that allow you to get there. And once you get there, you spread out. You do international, you start doing deals, and that's how it grows from there.
Yeah, I would say just on top of that, to keep it short and sweet, they're just a go-to healthcare platform. I think people prefer niche platforms. So Spotify is an example. Like at the time, did Amazon have music? Yes. Did YouTube have music? Yes. But Spotify in the music game is winning. Why? Because people prefer niche, personalized platforms. And so I think when you put that into healthcare, everyone cares about healthcare, whether it's testosterone, menopause, ED pills, hair loss pills, everyone will be affected in any avenue, and HIMS will continue to keep expanding their product line. And so at some point in the future, I guarantee, Amit, in 5 to 10 years, you'll be looking at a HIMS product because it affects something in your life, whether it's peptides, testosterone, menopause, anything. And so I think the long-term vision is just a play in healthcare, the play in your health, a play on a niche platform that provides that customization and personalization. I don't think there's, much more intricate into that.
So I guess the follow-up question from that, which is the question I know you guys battle with every day from a lot of the people that are skeptical, is what's the moat? Because I hear everything you're saying, but then the question is, why can't a bigger incumbent come in? I know you mentioned Amazon Music and Spotify, but realistically, why can't someone also personalize and then spend a lot of money on marketing, which is how they kind of get all this growth, to get to the point where they can become a Netflix of healthcare one day as well?
Who's that one too? Let me, since I'm talking right now, let me just throw in an answer, but then I'll turn it back to Jonathan. I kind of think that what Nate just said a second ago matters. So I made the comparison to an Amazon, right? Well, Amazon's a potential competitor. So if we're talking about an Amazon of healthcare, why can't Amazon be the Amazon of healthcare? And the answer to that, I think, goes to what Nate just said. You can't just be the monster company that is good at everything. You need to specialize. You need to go to scale and be good and the best at what you do. Amazon it's been operating in the healthcare space for quite a while. They have not put it together. They may have the scale. They don't seem to have the niche or the category specific expertise that have allowed them to take advantage of it. And so even though it's a much bigger company than HIMS, if you were to search on some of the common products where they're both active, like for instance men's hair loss, HIMS crushes them in the category and straight up category comparisons. And with all the advantages that Amazon itself has, is not actually competing well when it comes to HIMS.
So just to address Amit's question of like, why couldn't Amazon start personalizing medication? So I imagine they could. I have no idea what the economics are to get into that. I'm sure it's something that that they could take on. I don't know that it's something that every other company could take on profitably. I don't know. But I do want to sort of drill down into the brand that HIMS has built. I was at a party on Saturday night, and a lot of kids were asking me, what do I do? Because I used to be a software engineer at a startup. Now I'm building HIMS House. I told them I'm building HIMS House. I'm building the definitive investor community for HIMS and hers. They said, oh, I know HIMS. That's the hair loss company. That's the ED company. Now they're into GLP-1s. They have one of the best brands on the planet. And like, I don't know that I want to order hair loss medication from Amazon or Walmart. HIMS, I don't know that everyone would agree with this, but I think HIMS has made millions, certainly hundreds of thousands of men and women comfortable with pursuing medications for stigmatized diseases that previously they were not receiving treatment on. And they've done so in a really sexy way. If you just look at their Instagram ads, I tweeted something over the weekend.
Their marketing is pretty incredible.
Yeah.
It says 4-in-1 sex plus hair loss pill. I have no idea who would want to take that daily, right? I don't think that's something that you want to be on daily. I don't know. This is up to the doctors, and like you can't go to the website and really get it. You have to go through the intake form. You have to be prescribed this thing. But this was the biggest tweet in HIMS House history. And all I was doing was like retweeting a HIMS Instagram ad. HIMS drops 4-in-1 pill with a fire emoji. And, you know, we're at nearly 1 million impressions, 200 quote tweets, all of which are now calling HIMS the Willy Wonka company. I don't know that this is like positive or negative, but the fact of the matter is this is a company that is entered the imagination of millions of Americans in a way that Amazon and Roe and Walmart have not. And really, like, there is no path to them entering the public's imagination to the degree that HIMS has. So that's my rough response there. I'll turn it back over to Amit.
Yeah, I mean, to piggyback off that, I think the moat conversation to me in general for a lot of companies is always, it's just, to me, it's a way for someone that doesn't understand the company to ask, why should I invest? And so it's not a winner take all market, right? Amazon and HIMS can both win. Amazon, HIMS, and Walmart can both win. HIMS, Amazon, Roe, they all can win. I think the goal is to pick, you know, the sole winner. And I think Amazon and HIMS, to me, are the only two that really will actually win. I mean, look at Netflix. There's Hulu, there's HBO, there's Disney Plus, there's Peacock. Why is Netflix winning? Because it was one of the first, and was one of the first niche personalized platforms with their algorithm. I mean, you have the little For You. You watch one TV show that goes For You, go, oh, this does know me. I'm going to come back to it. And it's the same thing with HIMS, where it's personalized. Okay, they get this one, you know, dosage right, or they're good with personalizing. I just think it's not a winner take all. I think Amazon will win, and I do think HIMS will win. But to say that it'll just eat HIMS and take HIMS' entire lunch, I just don't think that's a credible or possible scenario. Can it take some? For sure.
Let's move to the vertical integration that HIMS has pursued, which I do think distinguishes the company from some of its competitors. Patrick, do you want to get into that?
You're throwing at me. Verticalization.
I'm happy to take it if you'd like.
You want to go ahead? You take a stab at that. Let's start
Okay.
with you.
Anytime someone asks about Moat, because you hear it all the time on Twitter, this company has no moat. I think there are two things in my mind that distinguishes the company. One is the brand, and we've talked a lot about that. The other is the effort that Andrew Dudum and team has made to vertically integrate, which has made the company far more profitable than all of its competitors. The company has bought a 503A facility, a 503B facility, a lab testing facility, a peptide facility. They bought a company called Apostrophe, which is was that for the 503A, Patrick?
I think so, yeah.
Okay, so that's repetitive then. But they've made, and then they own the UK. What is that? Honest Health.
Mm-hmm.
Honest Health as well. Maybe leaving out one acquisition, but they've made all of these acquisitions with the express intent of lowering costs so that they could scale in a profitable manner. To my knowledge, Roe has not made similar acquisitions. And then there are all sorts of other smaller telehealth companies that are less profitable, maybe not profitable, because they outsource all of the things that HIMS owns itself. And so, again, Amazon has the capability to do this, but to Nate's point, and to Patrick's point, I don't know that there will be just one D2C telehealth company at the end of the day. I think there will be 2 to 4. And if you look at what HIMS has done in the vertical integration, I think it's likely to be one of them.
Since we've been making comparisons to other companies, I think I'll throw another one out there, which is Apple. I seem to remember, Apple, especially if you go back 20 years plus, when Steve Jobs was coming back, it was kind of a mess, and Jobs hated everything they had done in his absence. And he said, you need something that's, quote, insanely great, and it needs to be simple and easy and work really well. Like in those days, people would look at, say, a PC-based machine, and you could do pretty much anything, but it was so complicated that a lot of people just weren't capable of using the what existed at the time to its fullest capability. Then you came Apple, and they just made it seamless and easy, and it looked great. And that kind of is what you're looking at with HIMS. And let's take HIMS out of the picture. If you got to go get hair loss medication, all right, first you got to call up your doctor. Okay, do you actually need to go to a particular kind of doctor is going to give you something on this? So you schedule that, you show up, okay, here's your prescription. Now I've got to go to the local CVS or Walmart, and remember to go back there and get it when it runs out, and stop, in case I forget to do it. There's so many different steps that are barriers that if any one of those falls apart, you don't get it done and the hair falls out. So like the Apple comparison, like say an iPod or iPhone these days, iPod back in the day, it's simple. It's all there. It's one step. There's not multiple steps where if you forget to do one of them, it falls apart. So the simplicity and convenience and the marketing and brand part goes with this as well. It doesn't have that clunky aspect that you would expect. Oh, now I've got to go to Walmart. I mean, we've been making those comparisons, and that's a whole other thing. Do you really want to put your healthcare in the hands of Amazon? That's another one. Or do you want something that's seamless, that all fits together, that's convenient, and it's being run by people who specialize in your particular issue?
I think the most convincing element of what you guys are talking about right here is the stigma around certain types of issues. And yeah, I mean, dude, if you share an Amazon account with your dad, like, do you really want to order certain types of pills on that account?
Fair point.
And the personalization thing, I hear it over and over again, but I think the way you guys are framing it is more so a question of, hey, it's a sexy brand with really good marketing. That's kind of the first thing you need to be having in order to be relevant in today's society, right? Because it's in a hyper attention driven society. And then number two, that anecdote about the kids at the party, I take that very seriously, because what the kids are using is what matters. Like ChatGPT is number one on the App Store, not Grok, not Gemini, not Anthropic or Claude, right? Like not Meta's AI model, it's ChatGPT. So when kids associate something with AI, they think GPT. They don't care about all the other models that exist in the world. Distribution matters the most if the personalization of that distribution plus the brand come together. Maybe it's not a moat the way people want like a tech moat to seem, but it's definitely a reason why market share doesn't have to be lost to incumbents, which I think makes a lot of sense, to be honest.
I think that's right.
Okay, so here's another question.
Could I ask just real quick, Amit?
Yeah. Yeah.
Something that you said near the intro struck me, which is that you've never thought of HIMS as a tech company.
Yeah.
I don't know what to make of that. I definitely understand why you're saying that. All I will say is that if you go back to the founding, it has a lot in common with some of the great tech companies of the era. So it came out of Atomic, a venture studio in San Francisco that was that received funding from Peter Thiel and Mark Andreessen. The co-founder, Jack Abraham, is now on the board of the Thiel Fellowship. And all of its VCs are the prototypical great VCs in Silicon Valley. So you get 8VC, which was started by Joe Lonsdale, another Peter Thiel associate, started Palantir, and Forerunner, which has started some. It's more of a consumer brand VC. I think they funded Harry's and Warby Parker and a few other brands like that. So kind of fits in with HIMS there. But they've also funded a ton of tech companies. And so if you just look at the pedigree, it does fit right in with, great venture-backed tech companies. But it is a healthcare company too. So I understand what you're saying.
Yeah, I don't know if any of that matters and if it's a health company. I think it makes sense that like they come from that venture bro type of ecosystem, but that to me has nothing to do with if it's a tech company or not. It's just, all right, they have some cool VCs. When I think tech, I think like, hey, is there a reoccurring revenue? Is there a SaaS business? Is there something that with juicy margins and all that? That's kind of more, is there like an actual operating network effect that can create infinite leverage in regards to having fixed variable costs, and then you just scale the product, which is what tech companies do.
Yeah, so you're talking a lot about HIMS there. The reason I brought up the founding story is that I do think the tech culture is sort of embedded in the way they operate. And I think if you talk to people at the company, it's more like a tech company than cost plus drugs. It's more
right.
Like
you're saying the culture of it. You're saying the culture of it is technological. Not, the product itself is. Is there any tech in the company?
Absolutely. I'd say one of the 5 growth pillars they've explicitly cited is the tech stack. And so there's a variety of things they use that for. One of the easiest, perhaps, which is a cost reducer, is every time a doc or medical provider does a consult with one of their customers, the AI in the background is run through all their numbers, the things they answered on some of the intake forms, and is essentially thrown right up in front of that provider. Here's our preliminary take on this particular person. Here's based upon what they've said, their tolerances, and any of the healthcare data points they have. Here's what we would suggest you do. Now, the final decisions, the final recommendations are in the hands of a human being, but it's AI assisted. But that said, that's just sort of 101. Over time, what they're going to find out is a lot of these different health issues correlate with each other. So if someone's in there with hair loss, they may be running into some of the other issues that they're dealing with, or ED, for instance, really might have correlation with testosterone, things of that nature, which they're going to be rolling out. The larger the number of healthcare issues that they're looking at, you're going to start seeing these tremendous correlations between different conditions. And so the AI essentially becomes not an AI doctor, because you're not removing a human being from the equation, but you're getting AI assisted healthcare for sure. And it's also figuring out ways based upon a very large data set of the best personalizations that they can do to increase tolerance, for instance, on weight loss drugs and things of that nature. So the AI assistance piece of it is certainly part of it. As data grows, they'll find more and more uses for that.
That's what I was going to say. I think it's important to take a step back and hone in on what matters in the next 10 years for AI is data. And HIMS has the platform to accumulate that data and be able to use it as a flywheel and cross-sell that data, just like SoFi, man. I think you understand SoFi's flywheel effect, where they can continue to sell different products and more products by just having those customers. And so HIMS is the same way, where they have that flywheel effect, where they can cross-sell, they can upsell, they can market. And also on the marketing piece, just something else to call it, is that marketing as a percentage of revenue is decreasing year over year, quarter over quarter. I think it was 47% or 46% last quarter, 39% this quarter, and they're going to decline that 1-2% every year. And so that's also going down. And that kind of shows the fact that they're still able to grow revenue at this rate, shows the flywheel is working, in my opinion, and the personalization is working.
The reason I'm asking about that is because one of the reasons HIMS might be as cheap as it is because it's not being perceived as a tech company. And so kind of the issue that SoFi is having right now, right? They're not really getting a tech multiple, even though they're putting up good growth. I hear what you guys are saying. They're using technology to improve the product and deliver the product, but the product itself is not technology. And so I kind of wonder how the street's going to think of that, because consumer packaged good companies, they get a multiple, right? Kinda, but it's not always like Warby Parker and these glasses. They don't really get a multiple. Now, granted, HIMS has way more scale and it's a totally different type of business, and healthcare is so many more opportunities. But I think what you're saying, it makes a lot of sense, because AI needs data. And if they have your data when you're 25 and you're starting to lose your hair, and then if you're 40 and you get ED, I mean, like those years of data, if you stick with the same brand, that's a lot of cross-selling that's involved.
Plus, they've got lab diagnostics, which is going to collect even more data.
There you go.
That's starting within the next this calendar year at some point, I think.
Yeah,
Later, second half of the year, I think.
Probably late 2025.
And they sell a subscription, right?
Mhm.
Sorry, Amit.
They sell a subscription, right?
Oh yeah. I mean, you were rattling off a few things. What, like recurring revenue, increasing margins, subscription revenue, and as Nate chimed in, you were describing HIMS when you
Yeah.
Right. And a lot of those things are characteristics of a tech company, even if they're not getting those from selling a tech product, which is why you guys, the bulls, are saying, why isn't the multiple there? Right. Or like, why isn't the multiple expanding? Because it's the same stuff as a tech company, even if it's not just selling software. So, and I see your point. I think that makes sense.
So, and the thing is, so I think there are two pieces to this. Number one, the conditions that they've started with lend themselves to recurring revenue. Like, you're going to need hair stuff daily, weekly, monthly, yearly, forever if you want to hang on to it. Same thing with GLP-1s. Same thing with certain mental health treatments. Same thing with various sexual health treatment. I don't know about it.
Testosterone, peptides, those will all be recurring as well. Yeah.
Right.
Now, that said, churn is higher with HIMS than many of the tech companies that you might want to invest in. I think that's worth saying. It's like HIMS House doesn't exist to pump the stock, right? Churn is not 2% a quarter. Churn is probably closer to, correct me on the numbers, Patrick, but 20-30%?
20.
A quarter? 20% a quarter?
20% a quarter.
Right.
It's about 6 or 7% a month.
And so when you compare that to the cost that it takes to acquire those customers, the unit economics are pretty good. However, they're not like various tech companies, at least as churn retention, those dynamics are concerned.
What are their margins? So if they bring in $1, how much profit comes in?
I can do this pretty easily. So you spend $1 on marketing, you're going to probably get back 60 to 70% of that in the first the initial response on your ads. Basically, that customer who's been acquired, you over the course of the first year, by the end of that year, you probably will still have 30 to 35% of those customers. At the end of that year, that cohort will have hit break even and on a net income basis. That covers the cost of the marketing and all of the variable costs associated with that. Customers that are there, that 30 to 35% that are still there a year later, about half of that revenue drops to the bottom line from that point forward.
So you guys think there's enough leverage for that to just get juicier and juicier over the next coming years?
Yeah.
Yep.
I mean, it's definitely a positive lifetime value of every single customer. But there are limitations for sure. So what goes into that lifetime value analysis of a particular acquired customer? You have the front end cost of acquiring the customer. So one of the things that has made them good is they've driven down the cost of acquiring new customers to a fairly low level so they can make those unit economics work. Retention is another piece of it. A big piece of the personalization that we've been talking about is really about retention. And they've shown in their data, if you've got, something that's styled specifically for the particular needs of a particular customer, that they're not going to get it with an off-the-shelf sort of solution. That's especially true for weight loss and these GLP-1s, since nausea and vomiting and all of that goes along if you don't have the right dosage and some of the right things that they can add to it to make it something they can actually stay on. Personalization ends up driving increased retention, and certainly they've been investing a lot in that. But the problem or the challenge, to some extent, the more people who get into the game, they're driving up the customer acquisition cost. People spend a lot of time talking about the total addressable market being huge, and HIMS is no more than low single digits in any of the TAMs they're operating in. The problem with that particular argument, from my point of view, is the chances of HIMS ever getting to 10, 20% of a total addressable market is probably not likely, because just because the total addressable market exists does not mean that you can cost effectively reach that entire addressable market. You're only reaching that subset that is responsive to advertising, that because you waste a lot of time and money on people who are never going to respond to any kind of ads. Doesn't matter that they may lose their hair and even think maybe I should do something about this, and just any kind of ad that's going to go run in front of them, and they're just going to be in one ear and out the other because they just are not responsive that way. So I think only a percentage of the total addressable market is probably reachable in a cost-effective way. So that's a limiting factor. It also limits the competition, though, because that's why I said earlier in this conversation, I don't think there's going to be more than 3 or 4 direct-to-consumer companies, because I just don't think more than that can reach scale. And that's when partnerships are going to matter. This whole notion of an Amazon or Netflix of healthcare really, in my mind, matters when you start striking up the partnerships, which they're only just now beginning to do. They're looking at doing a partnership more extensive with Novo and Nordisk, potentially one with Lilly. There'll be others in the pipeline. And that, I think, once they start expanding out and they start getting, especially if they hit individual customers with more than one product, which they mostly have not been doing up until GLP-1s, they actually, for a while there, collected data on both the number of subscribers that they had, meaning a subscriber is a human being, versus the number of subscriptions they had. And the number of subscriptions per subscriber was really low. It was like 1.1 or 1.2. The vast majority of the subscribers had a single subscription. But once you start growing, and it's started changing with weight loss, and so many of the people who were customers of theirs in any of these other conditions, weight loss was an issue for them. So that's when that multiple subscriptions per subscriber started to amp up. That is a way to increase. I'm not sure how you would enter that into a churn sense, but whenever I think of a SaaS company, when they have in excess of 100% retention, what they mean is that they're upselling, they're growing their relationship with the company. Well, that's what we're talking about there.
Yeah, I actually think that makes a lot of sense. And, I think from a leverage perspective, margin expansion, average order value going up, and just like having a relationship with the stock or with the company, which as a byproduct, more people that have a relationship with it should help the stock, makes a lot of sense. Now, talk to me about this, because I don't know what the heck's going on with Eli Lilly and Novo Nordisk. And then HIMS says they're working with Eli Lilly. Eli Lilly says we don't know who the hell HIMS is. But then like what? And then the FDA's involved, and the stock was down 20% because they lost some lawsuit. Like, what is all the regulatory stuff that is going on in this?
Do you want to start with the Eli and Novo stuff, and I can do the regulatory stuff?
That's fine. I'll just say this regulatory stuff is wild and has made HIMS House like in part as compelling as it's been, because we haven't had really a definitive news source on all of this other than maybe on the pen. There's a guy who does a really good job of covering GLP-1 specific news, but I'm not surprised. It's just to say, like, I'm not surprised you're a little confused about what's going on between Novo, Lilly, HIMS, and others, because the last 8 months have been wild. So let's just start with, I think the first thing you mentioned was Lilly coming out with the PR. It was good. We are not affiliated with HIMS and hers. That was it. It was one paragraph. I think the CEO had a word or two to say. This was in response to HIMS dropping on its website some images, and I guess the images and the products that they are going to be selling branded Wegovy, branded Ozempic, branded Zepbound, and branded Mounjaro for thousands and thousands of dollars, $2,000 plus dollars, right? Anyone can sell the stuff. You just need the patient to connect with the doctor and have the doctor prescribe those branded medications. The odds that the patients are going to pull the trigger and make those thousands of dollars purchases when they could probably get it for much cheaper, slim to none. And this was not, I want to be very clear, this was not a partnership between HIMS and Lilly or Novo. That did come in a informal fashion, I don't know, 3 to 4 weeks later, when 2 or 3 days before HIMS earnings report, they announced that they'd inked a deal with Novo Nordisk. Now, by the way, Novo did the same thing with Ro and LifeMD, I think. Although if you look at the terms, or if you look at what Ro and LifeMD offer, at least in the case of Ro, you have to pay, I think, $100 or $150 a month to be on their body program. And then with LifeMD, it's something similar. And so even though the sticker price was a little cheaper, like $4.99 for what LifeMD and Ro are offering, all in, it was just as much, maybe more than what HIMS is offering, which is $5.99 for the branded Wegovy. And that is the official partnership. No deal has been inked yet with Lilly, again, for anything other than the thousands of dollars, which is not a partnership. But during the Q1 earnings call, Andrew Dudum, CEO, said they have chatted with Eli Lilly. They want to make a deal. The goal is very explicit. The goal is to make a deal. They just haven't been able to agree on the terms. And so there's speculation pretty much nonstop in the Discord about when that deal will come. And if you talk to Patrick, and I'd like to in a moment, like, I think the deal is coming at some point.
It's going to happen. It's going to happen.
And the terms are likely to be pretty good. Is that right, Patrick? Or at least better than the Novo deal. I like the way you say that, though, so I want to turn it over to you.
So I should be clear. I don't have any specific insights into a potential deal between Eli Lilly and HIMS. That said, I do know there is a whole pipeline of drugs in the GLP-1 space that are coming right now. Novo and Eli Lilly sort of have this quasi-monopolistic toehold in that space, at least in the United States. And depending upon the country you're talking about, they're already rolling towards a generic status. I think in Canada, Novo is. But within a matter of a few years, there's going to be several players involved. And you would expect that. And so what I've said on prior podcasts is, okay, we've got a potential deal with Novo. We're still waiting to hear the details. Probably doesn't help that the Novo CEO recently stepped down. So that's probably going to delay things a bit. But that said, my expectation is that the first deal will be good. The second deal will be better. The third deal will be better than that. The fourth deal will be better than that, and so forth and so on, because the number of at scale players in the direct to consumer space is limited, and the number of companies that are out there with products they want to sell is much larger.
So the Novo deal, like, is that actually bullish, or is that just like a formal biz dev partnership that's good, but it's not that important?
We don't know the details yet. At the moment, it's relatively 101 deal where they're going to sell the product and provide the meds, and then because you can get on the actual websites for these pharmaceutical companies. I mean, now we're going to step into the legal territory. The pharmaceutical companies do try to create a barrier between them and the provider, because they're not in the business of actually directly selling drugs. So what they end up doing is referring someone to someone who is a provider who can provide that piece of it. And HIMS is that provider. They've got the relationships with the medical providers who can do all that. So that allows the pharmaceutical companies to maintain a certain degree of separation. That said, over time, I do think that what's going to end up happening is a certain percentage is going to end up going to HIMS, and that percentage will increase over time, because as you might expect, HIMS is going to have a financial incentive, although they say they're going to do what's in the best interest of their customers from a health point of view. But two relatively comparable products that can do very similar things, they're going to make sure they've got good relationships with the ones that are going to both be great for their customers, but also give them a good percentage of the cut. It's not like they're going to go in and take 10% or something like that. They're going to get the same kind of monetary. It gives you a monetary comparison, although I think there's some confusion around this. So I don't remember off the top of my head what the Novo monthly number is. Is it $5.99 a month?
$5.99.
$5.99 a month. Okay. So people say, all right, $5.99 a month, 100 of which will go to HIMS, the rest of which goes to Novo. That's 20%. Seems like not a lot, especially considering their gross margins are in the neighborhood of 75 to 80% most of the time, except that what they're typically getting on most of their products is somewhere in the neighborhood of gross margins of 75 to 80% on what's like a $60 product. So the dollars that are going to their bottom line on that $60 a month product are substantially less than the $100 or so that they're going to get from a weight loss subscription. Now, if you take that or something comparable to those level of margins, let's say $100, there's any number of products and pharma lines and medical devices and things of that nature where HIMS can be taken a cut and basically doing all the things that are necessary for that particular product to reach the customer.
And I think
so the dollars end up making sense.
I think what initially was really bullish and why it popped so much was because it kind of reduced the risk of being sued by Novo. And I think that's sort of why you're asking, well, was it really bullish or was it just a deal? I think that's why I was at 40%, is because a large part of people were worried about is Eli and Novo were going to sue HIMS because they've sued others before that were compounding GLP. And so once that partnership was inked, it kind of doesn't eliminate the risk, but it reduces it to basically nothing, in my opinion. And I think that's
because they were never selling
right
Mounjaro, but at least not compounded Mounjaro. But Novo could have.
Exactly.
That's who they did the deal with.
Right.
And if you talk to hedge fund analysts, there are some in the Discord. If you talk to sell side analysts, if you are a reader of Paul Serro's Cedar Grove, or even tune in to Adam May's Twitter account, the primary bear thesis for a matter of, 45 or 60 days, it's pretty much from the top. So as you know, Amit, we hit 72 in February. We tanked down to 22, right? And it was due to all sorts of things. Primarily the fact that semaglutide went off shortage. So they're going to have to be changes to the revenue and what HIMS was doing with GLPs. But as we started ticking up, we hit 30, 20, 25, 28, 30, the primary bear thesis again was that HIMS is going to be sued by Novo. It's not a matter of if, it's a matter of when. I can't tell you how many times I heard it's not a matter of if, it's a matter of when. And the deal drops, the stock pops 35 or 40%. And as Nate said, the risk of litigation overnight pretty much vanished because the company that was about to sue HIMS just inked a massive deal with HIMS. And now I do think it's worth saying it was, who was it? Was it Needham or Morgan Stanley? I think it was Morgan Stanley in a recent note seems to think the risk of litigation is not off the table, which is, again, like HIMS House does not exist to pump the stock. I also don't really take what the analysts have to say all that seriously because they've been wrong quarter after quarter. But I do think it's worth saying that there are people still out there that do not believe the risk of litigation has gone to zero. I think the risk pretty much evaporated. But as Patrick, as you and I were talking before the show, Novo has a new CEO or is about to. The former CEO just stepped down or was like asked to step down. So who knows what's going on internally at Novo right now?
Yeah, I would say it's not zero, but it's definitely, under 1%, in my opinion. It went from like what people thought was 99% down to under 1%.
Novo's getting their clock cleaned, and they need friends.
True. Yep.
And by the way, despite all of those analysts saying that it was not if but when they get sued, there was at least one person out there who was saying it was not necessarily going to happen. And that would be me.
Okay, so I think this podcast has been really helpful. I guess I have one last question here that I've been thinking about as well, and I kind of care about this question more than any of the other questions. I've had a bit of a privilege to help build some communities with Palantir and Robinhood, and community building is really an art more than it is a science. It's very dynamic. It's spontaneous. You kind of got to be. I remember when Palantir, again, stuck at $7 for 2 years, breaks out to 9 after their first profitable quarter, and then the rest is history. It's like every other week, 10, 12, 15, and every dollar, like $15 now sounds crazy, but every dollar was momentum. It was something where the community needed to be together in one place, and it ended up being a lot of my YouTube streams, and it was just a really special thing building it, and it's still special building it to this day. Same thing with Robinhood. Got lucky on Hood. I didn't know that would go from 8 to 60, but that got a lot of people to be formed in a community for a stock that realistically most people thought, Vlad had ruined his reputation with GameStop. Most people didn't think anything of it, and it's become a behemoth today. I think you guys have done an incredible job with HIMS. I mean, I'm just beyond impressed by the level of quality of content, the pushback against the mainstream suit narrative, like Bank of America. I've read their reports, and I'm like, I listen to you guys. Those guys are stupid, bro.
Well, I do want to say, because I've had a chat with Alan, and Alan's a good guy. I don't really enjoy smearing other people, and I think he's been dead wrong. And what is the current price target? 26? Did they just raise it to 28?
Yeah, maybe
he's been wrong quarter after quarter. They issued a revenue projection that said HIMS would miss. HIMS blew out earnings. They've been wrong quarter after quarter after quarter. But I've talked to Alan. I don't think there's anything malicious there.
No, he's just ignorant to the story, I would imagine.
I think he's studied the numbers as much or more than I have, or Patrick is very well studied. I'd put him up against Alan, but I think he just has a different perspective on the stock and on healthcare and on the competitive dynamics of the industry. I mean, the big downgrade happened after the Amazon news. They were bullish if you go back 6 to 8 months.
Wait, so you're telling me Amazon announces some random headline that they're getting into healthcare, and the analyst gets triggered to the point where he completely goes bearish? That is the alpha that I think retail has. So the amount of downgrades I saw on Palantir and Robinhood when they were first coming up, and I had to, look to the suits and be like, you're wrong. Like, you have to have a lot of balls to be like, no, you're wrong. I don't care how much money you're paid from Bank of America. You're wrong, right? Like, that is an art. And if they're going to get that upset over Amazon eating their lunch, when you guys eloquently told me for the past 40 minutes that, yeah, that could happen, but that's not really a risk. that's where I think retail has an advantage over the suits. So
we can be wrong. We can be wrong.
Yeah.
And we're
Dude,
allowed to be wrong. We're not going to make anybody, drop, a whole bunch of money from working with us because we're wrong on something. But it means that we don't have to go with the pack, basically.
that's what I'm saying. I've been wrong many times. You guys will be wrong in the future. But the point is, if it's retails versus the institutions on a name that is heavily owned by retail, I mean, this is the Tesla story, right? Like Tesla has completely changed the lives of millions of retail investors, made them so filthy rich. If they had listened to these hedgies back in 2018, 19, they would have never had that opportunity. So I just want to commend you guys because you guys have found counter narratives, and the way you found those narratives is by building a real community. Because in the amount of DD I get every day on Pounder and Hood by other people that are crowdsourcing the information, and then I'm just the vehicle to communicate that information to the audience. That to me is really special, and it's a big win for retail. And I'm big on that as a effort against, quite frankly, institutions that couldn't care less about the stock. But retail, it actually changes our lives. If you own 1,000 shares at $20 and now the stock at $60. Here's my question: why do you think people are so attracted to the community? Is it a little bit of chasing the stock? Is it they see some occasional posts that say HIMS will be like $5,000 a share in the next 5 years, or is it a genuine community where people believe in this whole Netflix of health type of vision?
I want to take a stab at that, but there's something really important to me to at least point out, which is that I do see HIMS sort of in the Tesla mold, where the street is just dead wrong on it, and like this thing could 10x. But the retail ownership and the ownership dynamics of HIMS versus Tesla or even Palantir are very, very different than what we saw with those stocks 5 to 10 years ago. HIMS is only owned, it's like 10% retail on it. It's 75% institutions, close to 13% insiders, 13% retail. Now the numbers are like different across sites. I really don't understand why there's not a consensus about what the actual number is. But if you look at Fintel and Capital IQ and various other, even Bloomberg, like there's no consensus. But institutions own at least 70% of the name, leaving retail with close to 10%. Retail doesn't own that much.
Yeah. Though building a community like the one that Jonathan has built is still important. It may be 10% of the stock, depending upon which source you're turning to, that is owned by retail. But retail, I think, has come to this particular community for a variety of reasons. First of all, the stock has been going up. It helps if you've got a stock that's going up. Same with Hood, same with Palantir, same with. There's a reason why, like, because everyone would like to make money. You've got a stock that's a hot stock, hugely volatile, so it can go up and it can come right back down, and has done so. And I've played both sides of that. Even myself, I've traded the stock on the way up and on the way down on the last squeeze. Yeah, and you have the squeeze dynamic. Then if you're in the Discord, I was not around for all of the fun stuff that was happening around GameStop, but I see a lot of that same energy with the memes and all of the rest of it, and people just having just fun. It's fun to be, if you've got a little bit of time, because I can't keep up with everything that they're doing in that Discord. But if you've got the time just to dip in and out for even 5 or 10 minutes, I can guarantee you'll laugh.
Yeah. Yeah. The one thing I want to say, building on that, is like when I started this, I had no idea what I was getting myself into. But the reason I stuck with it is that within a month, it was clear to me that the quality of the due diligence that was getting crowdsourced every hour, even on the weekends, was unlike anything I had ever been a party to. And I guess I'm in charge, sort of, but like the people in the Discord, they're coming from Europe, they're coming from Asia, they're coming from parts of Africa, they're coming from the Middle East, they're coming from Canada, they're coming from the US. If you have a few in South America, they're coming from literally all over the world. And they know more about this company than the Wall Street analysts that are paid hundreds of thousands of dollars a year to cover the name.
Yeah.
And
That's true.
That to me makes me the happiest because that's just cool.
Like,
And by the way, there are a few institutional people in there as well. They just
Sure.
are not public.
Of course, I've had plenty of them reach out. I mean, dude, they read our shit because they don't really know how to come up with original ideas. They need inspiration, you know, and Twitter has it.
there are fun memes. We have a good time. We joke around and we have inside jokes. And we're gonna have $100 party in New York City, by the way, Amit. And I know you're.
Well, I better own some stock to get invited to them.
I'm not extending the invite yet, but if you decide to buy, you might receive an invitation. In any case, we'd love to have you there. I'm just blown away by the quality of the thinking, the quality of the due diligence, how much fun we're all having together. I don't know. It sounds a little corny. Like none of us have really ever met in person. I've met a couple people, but like it's been a ton of fun. Yes, we've made a little bit of money so far. I guess there's a guy in the Discord called Drew who bought it like 65. So he's still a little underwater. We're
And is he still hearing about it?
He hasn't posted in a while. It's not clear he's still with us. Maybe if he's watching, he'll hop back in. But I don't know. That's just it. It's just to say it's an incredible group of people, as smart as anyone, and yeah, it's just been a ton of fun to do it.
Yeah, I do think a large part of it is due to just the stock going up so much. Like the stock was $2 2.5 years ago, and so as a community, you kind of continue to go against institution and be correct, and now there's a 34% short flow, and you still feel like, wow, institution doesn't trust this. Like, why is no one? I'm gonna, it still feels good to go against the grain and continue to be right, and that just compounds on each other and builds a community stronger and stronger and stronger. It's like, oh, we're right again, and that kind of just momentum just builds on itself. And like they were talking about in the Discord, it's pretty memey. I check on it every once in a while between meetings, and you can definitely get a laugh. People talk about 100x, the classic, and $100 and stuff. So it's fun.
Amit, I have one question for you, because you said at the beginning, like you haven't been as interested or attracted to the name, in part because it doesn't seem like a tech company. Maybe that makes it a little bit more boring compared to the other stuff that you've followed and tracked and built communities for. What do you make of HIMS? I mean, it's in healthcare. That's a regulatory wilderness. It's sort of inaccessible to most retail, or at least they don't really want to go there. But there's this brand, and they sell some stuff that we all need, and that you can have a fun time marketing. I guess, like, how do you think about whether it's a business that could sustain interest among retail for 10 years?
I think the hesitation I had originally when it was like $20 is that I got burned pretty badly on a biotech when I first got into the markets. And as soon as I associated anything pharmaceutical with HIMS, even though it's not literally a pharmaceutical, I just stay away. Like, I don't know Lilly or Pfizer or any of these names, because I just I need to understand the space, the regulations, the FDA. What does it mean? Why is it important? And I got burned bad on a biotech. Like I blew up my entire account. So, and it's, if you don't blow up your account at least once in your life, are you really right? It's like, but you learn from that, right? And you're like, all right, I'm going to stay away. I'm going to try to adjust. And so I think that was the initial hesitation. And then because I just got so deep into AI and Hood and Palantir and all these other names, and then NVIDIA has been a big part of my portfolio allocation this year. HIMS just didn't have room to have a real position. But I'm open to changing that by learning more about it. It's just, and I remember, I do a market open stream every day, and literally every other day, bro, it'd be up or down 10%. And I would just be happy not having to have the association with the name, because then I would have to explain why it's up or down 10%. And I don't know why the hell it's down, up or down. It's like some random FDA headline coming out. And so the lack of caring about why it was volatile is probably the reason I stayed away from it. The actual moat that you guys have described, and the operating leverage, and the ability for them to grow over the next 10 years, the personalization, I think all of that is correct. And I don't understand why the shorts are hitting it by 35%, but I'm thinking it's pure greed and arrogance, and they've been wrong so far. So my TLDR on the stock is that it's an incredibly interesting space, given the personalization stuff. The growth is magnificent, and the percentage of marketing in the context of revenue is slowing down, and I think that's speaking to their pricing power and their brand loyalty. And so then the question just becomes, is there space in the portfolio? I don't want to touch it at 65 though. Like,
I don't
it's
blame you for that.
$7 away from 72. Like, why? You know, so it's one of those things where I think I'm gonna have to wait until the 50s, 55s if it gets there. But granted, it might not. And so that's where a stock runs away from you, and it is what it is. And maybe I have to just swallow the bullet and buy it at 60. But
Which you do.
I don't think there's any narrative of keeping me against the stock in and of itself.
If I can just throw it out there, is there a possibility it goes down to 50, 55? Yeah, I think there is. The stock is in a really sensitive, high risk place right now. When I first got into it a few years ago, it felt like a no-brainer to me. Obviously, the stock was cheaper then, but also it was a no-brainer because I understood the LTV and I saw data points that other people were missing. I saw it was on a pathway to profitability when people were saying that wasn't going to happen. It was just easy. I was right and the market was wrong, and you like those kinds of situations because that's how you make big gains. That's not exactly where we are right now. Where we are right now is in something of a high risk place. So yeah, the FDA did some decisions on what, and there's been some court cases and things of that nature around what's happening with semaglutide. And so the whole weight loss category is sort of in transition, I think is a delicate way to put it. And even the stuff that's outside of the weight loss, in what people call the core categories, and specifically one we've mentioned a few times, sexual health when it comes to guys, generic Viagra, what have you. What they found is that the cohort that is most profitable for that particular product is not the young guys who they were marketing to before. It is now an older cohort who are taking a medication on a daily basis who can be relied upon to re-up. What they're doing is they're completely transitioning what is it's either the first or second largest core category is going through a complete transition right now, and that's a big portion of their business. So the company itself is going through transitions across the board in terms of its product portfolio, and then you have all these other things. What's going to happen with a Novo Nordisk partnership or an Eli Lilly partnership? How about these new categories that are coming online in terms of testosterone and menopause? Are they going to be really hot tickets, which I think they will be?
Yep.
But how hot? What about potential future partnerships? What about global expansion? What about acquisitions? Every single one of those things could potentially pop the stock or could potentially be a dud. And if it pops when you've got 30% plus short, it's going to pop pretty sizably. On the other hand, we could see a rundown. I mean, I don't think the volatility in the stock is going to change. So to get back to what you said, yeah, maybe we never see the mid 50s again. Maybe one of these things hits, it squeezes, it goes up to 90, maybe it settles back to around 70 or something like that, and you never see 55, maybe. But it could just as easily, that they do some announcement, people are underwhelmed by it, and it goes to 50. That could easily happen too.
Yeah, I mean, on volatility, didn't it have like more plus or minus 5% days than like any other stock?
I mean, yeah, Jonathan's your guy on that.
Yeah, I wrote a quick Python script to compare some names like Hood and Palantir, and I mean, it wasn't even close. I think we have it's close to a third of the trading days. Well, actually, and you could see if I was throwing in the 10%, 15%, and 20% days too. If you do that, it might be close to half of all trading days where the stock has moved 5% or more. I don't know if those other categories were inclusive of the 5%.
Just nuts.
And you know what's good about that though, and it's really relevant to the community that Jonathan built. So when the stock pops 10% on one of those days, the first thing you got to go is, what is this? Is it real?
Yeah.
Or is it BS? And in which case you will go opposite whatever the market's doing. I mean, I did that when the Amazon announcement was made. I mean, the thing got tanked, and I shifted hard into it. I said, forget this. This is an easy buying opportunity. The market is just wrong. So every time the market's wrong, the first place, or if you first got to find out, are they right or wrong? You go to the Discord and there's a bunch of smart people. What do we think? Blah, blah, blah. within minutes, you know what you're going to do.
Right.
It is utterly a trader's paradise. I mean,
Well, the one of the reasons I was interested in the name is I just want to sell the volatility against it. Like,
Well, yeah.
The cover calls and Kesker puts are crazy.
I mean, it's stupid, bro. People are paying $200, 5% in a month for it to go to 90.
Yeah.
45% upside and then a 6% return on the call. I mean, like, but then again, you know, the reason they're paying for it is because stock is volatile. So if I buy it at 60 just for that purpose and it goes back down to 50, I'm down, right? So, but still, it's incredible the juice. I mean, it's like micro strategy type of premiums.
Yeah.
It's pretty impressive.
yeah,
One of the things that Jonathan quoted me on in the early days was, and I meant it when I said it, I did not write this in the Discord to make Jonathan happy. I just said, if you have any meaningful position in this stock, it is stupid not to be paying to be part of the Discord. Some version of that, and he quoted me.
Well, I'll say there is a premium tier, but if you don't want to fork over $20, that's perfectly fine. We're happy to have you. But yeah, thank you, Patrick, for saying that, because it is what I do full time now.
Yeah, look, I mean, it's an incredible community. I think you guys have built it with a lot of love and intelligence. And when I get in, I'll post it on X, and everyone will know. I'm a little hesitant at these levels, but Nate has educated me enough over the past year to not be that afraid of the actual company itself. It ran away from me at 40 when I sold, and it is what it is. It happens. So hopefully
I post in your stream like every day.
Yeah, it's like I'll be saying good morning to everyone, and then I look at Nate's comment. It's just capital HIMS, and I'm like, Nate, I don't know what you want me to do with this, but thanks for being here. So
Well, you may, yeah, I don't know what to expect on those streams. You've got a ton of followers, but you might see even an uptick from the baseline after this episode, because
no, in the chat every day, I would say there's a good at least 10% of them that all they want to know about for 4 hours that I stream in the morning is HIMS. HIMS. What's going on with HIMS? I click on HIMS. I'm like, guys, it's up 4%. Short float still 34%. No headlines. Skrelly went on the HIMS house. He said some good stuff about not shorting it, yada, yada. Played a clip of the HIMS house. I was like, what more coverage? Let's talk more about HIMS. Tell us more about HIMS. Like, I have nothing else to say. Like, so the interest is just incredible on this name. But I don't want to buy it just because people are interested as well, right? Like, so it's just one of those things. When it gets to my price level, hopefully I'll be able to get a shot at it.
yeah, it's crazy to me that retail is only 10%. I don't know enough to understand whether that could change. It seems unlikely to me at this point, but I don't know. It's been cool. Thank you, Amit, for coming on the HIMS House podcast. This has been episode 31. We'd love to have you back at some point. I hope when we do that you'll own shares of HIMS.
But I hope in the future I'll own some shares, and then we'll be breaking down some real due diligence on the company as I own shares. But thank you guys for having me on. It was awesome.